Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to go through the week ahead analysis. We're going to go over the news for the week and some key charts of interest. So starting off with the news, we have quite a lot of high impact data this week, which is going to add a lot of volatility in the markets, and a lot of the data is geared towards the US dollar, kicking it off with the PPI data. Now last week we saw CPI figures coming in a lot stronger than we expected, and that saw the US dollar strengthen quite significantly, and the data here is also suggesting a similar thing could happen. We've got forecasts suggesting numbers coming in above previous, so we could see a continuation of that dollar strength this week, especially with the higher volatility as well. Now the Federal Reserve are looking to hike interest rates this week from 1% to 1.5%. Now, because of that CPI data last week, there is some pressure on the Fed to potentially hike higher than 50 basis points, maybe even a 75 basis points jump, but we'll have to see how that data comes out. If we did see a 75 basis points jump here, then we could see a little bit of a shock to the market, and we could see the dollar continue to strengthen a bit more aggressively than it already is. But again, looking at the sort of dollar data, the FOMC press conference will be the key to see what the Fed's going to outline next for the continuing meetings. So we'll expect some more aggressive hikes to come, especially as they're not seeing that inflation rate come down yet. So be an interesting watch on Wednesday. In other sort of central bank data, we do have the Swiss National Bank rate, but more importantly, we have the Bank of England rate, which is looking at a 25 basis points jump in the UK. Again, the Bank of England have been fairly hesitant on hiking interest rates because of the risk of rising in unemployment, which could have a knock-on effect to a potential recession. So a 25 basis points hike here. Again, we'll have a look at to see what the Bank of England say in their notes of what their positioning is for the next meeting. Going into the strength meter then, not real any changes to the strength meter at the moment, or there's been very little. The only thing to really note is the fact that the US dollar did get stronger as we expected from last week's data, and we can see that the euro here came from that reversal area and started to see a little bit of weakness coming into that market. So there's a potential for that to continue going into this week, especially with that strong dollar. So we're going to kick it off with Aussie US dollar on the charts. You've got the 4-hour time frame here with the weekly profiles, and we can see that price is trading outside of that value area. And when price typically does this, we see a continuation in that direction. Just to kind of highlight that here, price traded outside of value this week. It continued up. We traded out of value the week after, and price continued to the upside. The following week, we then traded back within value, or price closed back within the value area, and we reversed in that market. So we're trading outside of it, expecting downside to continue. We do have an untested point of control at 7015. This could spark some buying in the short term, as we may see some profit taken from the moves that we saw last week. We can kind of highlight here as well, there's a left shoulder here from a head and shoulders pattern. So we've got the left shoulder, head, right shoulder of that pattern there, just showing us again that there's a kind of change in cycle pattern going on here on the Aussie US dollar. Now, a zone that I've highlighted here is 7143. If price gets back to this area, I think we could see some sellers re-entering the market at this point. It's a low volume area combined with the value area low. So that's going to be a key area to watch going into this week. Next up is the pound. The pound really drove lower last week, and you can see these very strong bearish candlesticks. We dropped quite significantly, nearly over 300 pips last week, after breaking through that key low around about the 420s. Now the next sort of point of interest would either be this kind of low volume pocket that the market's in around about the 123, or just a little bit lower. I quite like the 122 area. There's a high volume node down through here, which could act as support in the near future. Again, we're going to have to look to see if there's any profit taken from this current move. If there is, we could see price climb higher. The only real point of interest for me would be back at the value area low at 124.83. If we were to see price come back to this level and some bearish price action form, we could expect this downside momentum to continue. Kiwi dollar is at an area of interest already, so much like the Aussie US dollar, we've closed outside of value, which does suggest that we probably would see a continuation of this downside move. We are at a key area, so you can see 63.55 was a previous point of control where the price is starting to stall slightly. So in this case here, I would look to see if price either rejected the value area low and break through that point of control, or if price can come back to the point of control of last week at 64.45, that would be an area of interest for some further downside as well. So looking more towards the downside on these markets, I do expect some kind of pullback, maybe towards the sort of Fed meeting, and then after the Fed meeting we may see the continuation of those moves, so be aware of that. Finally then, the S&P, we're expecting a breakout of this evenly distributed area. We did get that breakout ahead of the CPI figures, but the downside continued after the fact as well. The increase in inflation will cause the Federal Reserve to act more aggressively. The stock markets have reacted negatively to that news in the past, and is looking likely to happen again in the near future. Again, kind of points of interest for me, this kind of recent low volume pocket around about the 4,008 mark. That would be an area I would like to see price retest for some potential further downside. Or alternatively, we do have this low volume pocket down at 3,825, which price could come and retest as well. So looking for a reaction at either of those areas. I don't quite see price coming all the way back up to this 4,100 level. I think the selling pressure may continue quite aggressively going into this week. So I hope you enjoyed the video. I hope you learnt a lot. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.